I'll be having back on stage to moderate this first panel, Mr. Tayo. But before he comes, we'll be looking at institutional investments, the redefined West African real estate markets, drivers, and new frontiers. This will be moderated by Mr. Tayo. Please make your way to the stage. In conversation with him would be Oduayo Ojo, CEO, UPDC PLC. We'll have Shade Hughes, Nigerian head, Mr. Africa, sorry. We'll have Femi Akitunde, Group CEO, Alpha Mid Group. And lastly, Funke Okubadejo, Director, Real Estate Actors. So ladies and gentlemen, if you had your name, I am leaving the stage so that you can come have your seats. Can we put our hands together for them?
Okay. This is definitely a very exciting panel. Though I've been on this conference circuit for a while, but not sure I've had the pleasure, maybe Mr. Kid today, moderating a panel or having, sitting on a panel together. Been looking forward to this. Thank you, Nancy. Like you said, the topic for this panel is institutional investment, the redefined West Africa real estate market, drivers, new frontiers. And Mr. Oduayo Ojo from UPDC is on the panel, Shade Hughes of Mixta, Funke Okubadejo of Actis, and Mr. Kitude, Group CEO of AlphaMe. Thank you so much for jumping on the panel. The way this panel is going to flow is I'm going to be asking a couple questions, pretty much related questions, and Funke, I'd like you to just talk to this from obviously commercial real estate investment perspective, because obviously you've done that for a couple years. Mr. Kitude, you've led one of the leading facility management businesses out of Africa, because you are in over 10 countries, and obviously also then gone into development. So you will saddle with two responsibilities: facility management and residential property development. Shade, great work you are doing at Mixta, doing a lot of urban planning, and of course at Lackawe Lakes, also doing a lot of hospitality real estate. So two for you as well. Oduayo, I'm not going to leave you out with two. You also take two: urban planning and development management. First question off is kind of in the last 5 to 10 years, we've seen about two to three recessions, depending on where you're checking. All right, if you're checking Nigeria, it will read 3. If you're if it's in the Ghana story, it's just 2. But lots of political unrest, social unrest, spells of heightened insecurity, and most recently a pandemic. And despite all of this, West African real estate markets have thrived and can now, in the last 10 years, say they boast institutional investment, both from an international perspective and even within the continent. We have, lots of investors, service providers, developers flowing across borders into West African markets. I just want to start with Funke. I don't know why. Maybe they say ladies first. Funke, just from your perspective, sitting on a desk that invests in commercial real estate, can you take us through what you feel has happened in the last 10 years? What have been the challenges? So I would like to hear the negatives, but also talk about what has improved, what has changed, what opportunities have you seen, and how it has led us to where we currently are. Yeah.
Thanks, Ted. Hi, everyone. Pleasure to be here again in person, and really hoping that we continue in this trend. I'm actually going to go beyond 5-10 years. I'm going to go back to when we really started an investment and talk about what was the framework. I think then when we did our investment thesis, as we call it at Actis, it was always easy. It would just be if you look at the economies and some of the statistics, you talk about population, you're talking about the rising middle class. It was very easy to just have a trend, which was basically the lack of a supply of good quality real estate in every sector that you had. So you didn't even have to justify too much. And that was really just the theme. You know, if we're now looking today, there's been, as Tayo said, there has been a lot of investment by various stakeholders, local and international, in the market. So you don't have that liberty just to say, oh, there's not enough supply. And I think behind them, when we were starting from ground zero, you know, one of the key things there was data. There was no data. And I think people just looked around and felt instinctively, yeah, there should be this good quality of real estate in this market. I think that's, for me, is probably one of the most powerful changes that we've had. You know, we've all just heard Tayo and the number of his peers who now actually helping people to be able to make more informed decisions. So then when we needed to make investments, we had to go proprietary. We actually had to find the data to be able to make those investments. And I think that's a great one, because if we have collective decisional making being supported by good quality data, you find that the quality of investments that will be done across the board will improve on an overall basis. Another key thing that you had at that time was, you know, there was no data, there was instinct, there were people doing their own work to make a decision, you know. So when we look at the first destination retail mall in Nigeria back in 2005, I think there was a lot of skepticism whether this would even work in Nigeria. And then you had a lack of debt capital. So we couldn't actually find any financier willing to put debt because there was just no belief that this will work. So, you know, we're very proud of the sort of catalyzing and pioneering investments that we made. And we actually funded that particular project 100% equity. It was after it was built that we were able to get one of the leading banks to now refinance on completion. So today, you know, you've now found, you know, not just the equity investors, but the debt investors all looking at data, providing information, and you know, to that extent, you know, we should be able to see supply being provided in a way that makes sense for what the opportunities set are. And I think that's what's happening, which I think would be quite powerful on an overall basis. I'll say, you know, there was just, you know, development expertise. A lot of that had to be shipped into the country. Obviously from, you know, when you look at many decades on where there weren't significant investments in most of our markets. And I think today, looking in the room, you know, we've now seen a development of the expertise, and I've spoken in particular about, you know, the data, which is where it all begins. There's also, in terms of development expertise, in terms of how you actually do projects, project management, which we're seeing that a lot of that information, that skill has actually been developed over years. How do I see the opportunity set? So, you know, we've moved from a situation where we could just say, oh, there's none, and there should be, and we project our data, to one wherein the opportunity set has now moved from just greenfield development. There's opportunity to look at brownfield developments. And I think furthermore, for the development of the sector, we will begin to see more what you call core investments, wherein you are now really creating and deepening the institutional investments by getting, you know, local pension funds, insurance companies to actually invest in real estate in a way that they're putting their equity to work for, you know, income generation, long-term capital growth. We shouldn't forget, at the end of the day, pension funds, you know, you've talked about inflation in Nigeria. And the question is, you know, how are they protecting the pension funds and the real place that real estate plays? So if you go global, you know, 5 to 10, sometimes 15% of pension funds assets, AUM, is actually invested in real estate. It's for that inflation protection. I think now, looking at collectively what's been done, you know, that's where I would expect to see more nuanced investments that are being done by ourselves and others that is data-based. I think one other thing I'll say that excites us about green buildings. So when we started investing in green buildings 10 years ago, we had to ask, what's the so what? It's gratifying that, the whole world is catching up today. I remember then the question was like, will someone be prepared to pay for the additional cost of saying this is a green building? Obviously, we found out very quickly that nobody's really willing to pay. However, there is a savings that you would have in the life cycle of the building because of the cost of that. So in short, what I'll say is that there has been a journey, there has been a growth, there's going to be more nuanced perspective that people have to take to making investments. And I'm not going to talk much about COVID, but one of the key things we've also seen is the resilience of this sector in terms of how it's been able to begin to bounce back very quickly. So the demand itself, and if I go back to what I talked about, secular drivers, whether, the key issues are being addressed or not, the population continues to grow and is even growing faster. Urbanization is growing and is even growing faster. And so the demand side of real estate is moving very quickly. The supply side has slowed down because there's not much investment because of the key issues we've talked about. So we are in a situation where one has to look quickly to say, where are those investment opportunities? How are we going to respond to them? We don't want a situation where all of a sudden, there's so much investments that is not being backed up by actual data. And I think for me, that will be what will show the real growth that we've experienced in our experience for the last decade and a half. Thank you.
Brilliant. Thank you so much. I think it's only right for us to clap for Gail. I'm just looking forward to what you're going to say, Mr. Kitsune, because I've heard you say this a little bit before, but I think everyone wants to hear your journey, leading, the biggest indigenous facility management business, and, one of the pioneers in, again, going sustainable and green, even in residential developments.
Thank you very much, Tayo. And thanks for the opportunity to be on the panel today. We're not all as lucky as Funke. The honest truth is that we're talking about institutional investors. What does that really mean to us in Nigeria? How much of it do we have? How deep has it gone? If you are in the real estate sector in Nigeria, you will agree with me that we're in a very, very peculiar situation. The likes of actors have good funds behind them. They have the reputation, they have the name. They can access money. And I think maybe the biggest challenge to Funke will be, where do I spend the money? As a real estate investor or developer in Nigeria, we face a totally different challenge. And it starts from, where is the money? Who believes in the industry to invest in real estate? Who believes in your company? What do you need to do to make a believable brand? And how sustainable would that be, given all the challenges from government regulatory environment, the laws, compliance, bad reputation, bad projects, bad credit performance of real estate? All this add together to make our life very, very, I won't say difficult, very interesting, because every morning you wake up, you are going to work, you plan this, you meet this. Do you want to talk about all the issues about tax and everything? Misinterpretation of tax laws as it affects real estate? You have to do everything possible to lecture the government agency who has made up his mind how he wants to interpret the law. So these are big challenges that we face, and it's a long journey. You're talking about the last 10, 20 years. let's start from the very top. There's a recent report that was published, credited to McKinsey, where they said real estate constitutes 70% of global wealth, which currently starts about $514 trillion. The 70%, the remaining 20% is to fixed assets, right? Within the 70% of real estate, 50% is residential assets. What does that mean? What does that tell us? It says that a lot of wealth is stored in real estate. But can we truly say that is the same situation that applies to us in West Africa and in Nigeria? And if that is the case, how are we unleashing the potential of that wealth to multiply and to become sustainable for us? There is this saying that capital goes to where it's welcome and it stays where it is well treated. The real estate sector, so many odds are against it. AFAMID has raised money from the capital market, I think twice now. And I tell you that it's not a very palatable experience. By the time you are showing up in the face of an investor and you mention your industry, once you say real estate, they said, we're not investing in that. It's too risky for us. As a matter of fact, there was a young man one day, we were, talking about our bond. And the moment we started talking, once he heard real estate, the guy just blanked off. And I asked him, I said, sorry, I could see your body language, and you don't need to tell me that you've already concluded what you'll tell me after this presentation. But may I ask, are you living in your own house or you are renting? He said, of course, I'm renting. I said, okay. For that reason is why I'm here. And if all of us keep running away from real estate, nobody's going to solve this problem for us. It's not because it is easy that some of us are there. We're there to make it happen. Some people have to lift the heavy weight. So if we're there, how do we connect? How do we collaborate? The investors, the developers, and the managers. And that is a challenge we have to confront. We have to deal with it. We cannot continue to avoid it. Otherwise, a lot of people will not start to talk about their first ownership of their home until they are retired. And they probably live for another 5 years and relocate. They change address to somewhere else. You know where I mean. Because the stress is too much. How do we make it happen that people own their residential asset early in their career? What do we need to do to fast-track that journey? These are real challenges we must be prepared to deal with, because I'm talking on residential. But for me, investing in real estate is a very interesting thing. But let's look at why is it not working and what do we need to do to make it work? I would put the problems in two perspectives. It's structural and it's also systemic. The structural part of it has to do with the connectivity between the demand side and the supply side. A lot of effort and focus is on how are we going to fund mortgage? How are we going to fund the demand side? And everybody forgetting that supply chain only works when the forces of demand and supply effectively resonate with each other. Otherwise, there won't be flow. If demand is strong and there's no supply, the supply chain can work. If supply is strong and there's no demand, supply chain can work. So how do we make the two work? Look at where it starts from. The people, the buyers. The economic challenges is so huge on people. Disposable income of people is so small that when they are prioritizing, only a home does not rank in the first two. Trust me. It's food first. Then, you probably talk about education for the children, for those who take it seriously. people always believe I will find somewhere to eat, to live. So what do we need to do to make that happen? And that's about the question of affordability. And when we talk about affordability, it's not just about the price, it's also about the payment terms, how to align it with the earning profile of people. And that is one area we have looked to say, how do we lower that entry barrier? What do we need to do in terms of the way we structure the payment, the structure the finance? But the fundamental issue of not having the money to do development to meet the demand is still there. So we then have to say, disposable income of people is low. So how do we come to their level? But then the next challenge is, when that happens, it means developers don't have sufficient off-takers, right? Then when developers don't have sufficient off-takers, it's one of the conditions the bank require you to meet to get fund, right? So there's a disconnect. Now, take the next level, the primary mortgage banks. Whether we believe it or not, primary mortgage banks are illiquid. Let's look at the number. Let's look at the really active ones. There are not many. We can't continue to deceive ourselves. So if the primary mortgage banks are not that buoyant cash-wise, how would they provide mortgage? If there's no demand from off-takers, how would developers develop? If developers don't develop, where is the stock to mortgage? If there's no stock to mortgage by primary mortgage institutions, where is NMRC going to function? So structurally, there's a disconnect. And we need to deal with that disconnect properly. If we address that, let's go to the systemic issue, starting from government. There are all sorts of laws. People just wake up, they just pronounce things, and you are wondering. Look at a good example. Somebody says that you want to make monthly rent compulsory. Are you the owner of the asset? Are you the investor? Do you know what I go through to build that facility asset? So we need to look at things and really, really understand what are the things we need to fix to make it work for all of us. I think there's more time to talk about the issue, but I wanted to raise these issues and I'll come back later. Thank you.
Okay, thank you so much, Mr. Akitsudi. I'm now going to move very quickly to Shadi from urban planning and hospitality real estate perspective. Can you just take us on your journey, what has worked, what have been the challenges, and what do you think have been the drivers that has kind of led us to where we are now?
Thanks very much, Mr. Ojonsi. It's an absolute pleasure to be here again. I think we had 1 year when we were all sort of indoors, and so it's great, it's great to be back, and well done for being consistent and being out there. Thanks, Funke, for addressing, the area that you addressed. And Mr. Akintunde, I couldn't have said it, in any more passionate way than you have. I think having had Mr. Akintunde sort of deal with, he can be the bad cop. Let me try and be the good cop, for real estate. Obviously, real estate cuts across, different segments. There's commercial. I think, there's, residential. And there's hospitality, like you've mentioned. And then there's also one part of it as well. There's one key part that kind of forms the backbone for everything, and that's infrastructure. So infrastructure is something that we tend to sort of assume, but I think that the situation that we find ourselves in Nigeria, and I can probably speak a little bit for some of the African countries that we've been in, is that this is actually a perennial problem in Africa. So you're not only faced with, trying to develop units, of whatever it is that you're doing, office buildings, residential, whatever. we're also faced with a big, huge problem of lack of infrastructure. For a country like Nigeria that has huge numbers, growing numbers, high level of urbanization, we're buckling under this problem. And as Mr. Akintude kind of alluded to, there's some, major structural issues that I think I can definitely, speak about for Nigeria, and also in some of the other African countries that we are in, because the company that I work for, we're in 5 African countries. So we actually have a fairly broad perspective. We're up in North Africa, Tunisia, and Morocco. In West Africa, we're also in Senegal and Ivory Coast, apart from Nigeria. And it was very actually sad, Mr. Odunsi, that map, that schedule that you gave. Seriously, Nigeria 8? 8 out of 10? Oh my goodness, but I mean, big up for some of our other, mixed countries. Senegal is there, up at the top. So that's nice for us and my colleagues in Senegal. Yeah, so infrastructure is big. I think that there definitely needs to be a greater alignment. So Mr. Akintunde spoke about the value chain really in real estate and the fact that there's so many disconnects. I think that it is imperative. I think we talk about this year in, year out. We suffer it every day, every week in trying to, connect. I mean, we're on the supply side. Of course, we need to have the demand side needs to be well developed. We speak about accessibility to real estate from the demand side. And so we ask ourselves that, okay, mortgages, I guess we just need to be very, very innovative. What are the other alternative, acquisition, home acquisition pathways? I think maybe that's something that we really, really need to, take very, very seriously here. Because, we can't, as developers, and as developers of scale, we are doing something that is necessary. I'm not even going to talk about the housing deficit. I think we've flogged and flogged and flogged that over and over again. And the question is, okay, so, what are the solutions? So there's a deficit, okay? So they're developers, they're developers of scale. They're people who are, focused on, producing the products. But what are we doing about, being able to, develop more pathways for the supply, the side, the people who actually want to get access to this real estate. So there's a real problem there. Having said that, what has been happening over the years, there's, on the commercial side, there's all kinds of innovation that's going on. There's increase in short lets, there's Airbnb, there's, shared working spaces. In terms of retail, Funke has been, has sort of summarized the journey in the past 20 years. It's interesting when you kind of sit back and you actually, remember that it wasn't so long ago, and yet it is a little, quite long ago, that the advent of malls. I remember then, working together on the Palms, when the question was, I'll mention his name, Mr. Amusho at that time. Is this guy, is he crazy? You know what I'm saying? Is this going to work? And guess what? Africans are aspirational. Has it worked as well as it should? I guess that's a topic for another time. In terms of hospitality, in the past 10 years, in the past decade, I would say that there have been some key transactions. This is one of them, the one that we're in at the moment. There have been key transactions in other parts of Nigeria. More recently, the Hilton legacy. Is it going as fast as it should? No. Africans, but here's the interesting thing now. Africans are developing their own brands now. So there's the international, hotel chains and all that. But, they come with there's benefits and there's also downsides there. So I think in reaction to that, Africans, that's one thing that we really are. We're extremely resilient. So there's a movement towards, developing African brands, with their own, brand standards, tailored towards the various, sociocultural settings that they're in. I would say that we as a company have played on both sides. This hotel that we're in was our development back then. The lady sitting beside me on the right took it away from us, but that's okay. That's okay. we willingly transacted at that time, so I think that was fine. And we are also, exploring. So Junsi mentioned a very interesting piece of real estate that we are currently working on. It's a long-term project that we have down at Ibejuleki there, Lakowe Lakes Golf and Country Estate. Premium real estate, hospitality section there as well, and other things that we're doing down that. So, I think, what can I say? I think that, infrastructure, because we're developing at the scale that we are developing, infrastructure is something that really, that is something that we battle with all the time. There's civil infrastructure, there's, roads, there's, primary roads, secondary roads, tertiary roads. How much is government coming to the table, to assist, developers and development with? Again, that's a question that's hanging in the air. I don't think enough. There's also M&E, then there's your, access to your basic amenities, electricity, water. And then let's not even go into the sophistication that shall I say that real estate is kind of tending towards these days. Let's not go into ELV, let's not go into smart buildings and, just smart communities. There's a huge amount of infrastructure that is required for that. There's a huge amount of investment. And I think that in terms of, we're talking about, FDI and, institutional investment. I think that is one area, actually, that I think, the industry should actually take, very seriously, because it is an area. It's an aspect that drives a lot of value, and drives a lot of growth. It's a trend that is a global trend, and I think that it would be a mistake for us to just ignore the fact that we really need to start being developing sort of smarter communities. In terms of, I think I made a few notes. I think I've covered a few points. So maybe we can circle back later. Thanks very much.
Yeah, thank you so much, Ade. All right, quickly to Mr. Ojoan. Anytime I think about Odoayo, I always best way to describe his experience is if he was a footballer, he would be that type that can play with both legs, and he can play in the middle, defense, attack, and potentially even keep. And perhaps he can even just quickly resolve the issue of which rice is better, the Ghanaian one or the Nigerian one, based on your experience. And I think apart from talking about urban planning and what Funke also mentioned, the growth in development management and project management, those are some things I'd like you to touch on, but also speak about the Ghanaian experience and Nigeria. Maybe we can borrow. Yeah.
Thank you very much for that introduction. Player with both legs. And it's a pleasure to be here today. Thanks to the organizers for inviting me to speak. So if there's anything we've learned in the last 10 years or so, it's just how volatile this region is. I remember in 2010, there was still the advent of the global financial crisis, and everyone was wondering, what's going to happen to West Africa. I mean, the developed world was grappling with subprime and all sorts of issues at the time. And just very few years after that, countries like Ghana, was emerging as one of the fastest growing economies in the world in 2012, growing faster than, the BRICS. And everybody was wondering, where's Ghana? And, we saw a lot of investment coming to that market during that period. And then fast forward to 2014, when the oil prices got to $110 per barrel, Nigerians were drinking more champagne than the French. And we had more private jets being bought in Nigeria than almost everywhere else in the world. And you can see how quickly this environment changes. And then fast forward 2015, there was a recession. And with it went a lot of investment capital out of the system. So if there's anything we've learned, it's just the volatility of this market and how we should be nimble as real estate players and how we should react very quickly to the changing environment that we have found ourselves. COVID was another very good example. Actually, I took a census after COVID, and more developers had growth in their businesses during COVID than most other sectors. And that just shows that we don't really know what we know. And we don't really know the resilience of this market until we are faced with challenges. So I believe my other panelists have focused a lot on some of the challenges that are inherent in the system. So I'm not going to repeat all that they have said. I think they're very valid. But in my experience, what I've seen is the changing trend in how developers and investors are behaving and how capital is being attracted into this market. So initially, there was the traditional sectors. Everybody was playing in the residential and the commercial space. And very quickly, because of the lagging nature of real estate, we realized that it takes about 3 to 5 years for your plan to materialize. By the time you do your feasibilities and all that, it takes about 3 to 5 years for the building to come into the market. And by then, given the volatility of the market, things may have moved. And then we saw that really affect some of the grade A office buildings that were being developed just at the time recession was hitting and businesses were leaving the region. And we saw that with retail as well. By the time some of the retail malls were being completed, technology had taken over. You know, you had the Jumias and you had the Kongas, you know, delivering products all around in your homes. And you didn't have to necessarily go to the malls. So what we have seen is a change and a shift. Investment is still coming in nonetheless, but investment is finding other opportunities. We're now beginning to see increased opportunities in areas like logistics. So we've seen more investment in logistics parks. We've seen more investment in other non-traditional investments like healthcare or even education. So a lot of people are beginning to look at, okay, where is the demand? And it's not just the demand, because everybody keeps talking about affordable housing. But there's no effective demand in affordable housing. The income levels are still very low. If minimum wage is 30,000 naira, I mean, how many years do you have to work to be able to afford a house of 5 million naira? You know, it's just not sustainable. So there are other structural issues that we need to deal with. But investment is coming in nonetheless. And investment is finding other asset classes that can sustain the growth and that can even drive like a resurgence in the real estate industry. So real estate is more than residential, is more than commercial, is more than retail. We are now seeing a lot of investment go into non-traditional investments, and that is an area I think we'll continue to see a trend go in. Also, there is been a renewed interest in alternative investment vehicles. For example, at UPDC has one of the largest REITs in West Africa. And that REIT has been doing very, very well. And this is a way that also the pension funds and institutional investors have been able to come into the real estate market. And I also predict that we'll be seeing more and more of such interesting alternative investment vehicles created to attract more investment in the market. And just to talk quickly about development management and how important having the right skill set. You know, Funke alluded to the fact that in the last 10 years, we all had to create things from scratch. We all had to build teams from scratch. But now, more and more investors are beginning to see the value in buying good advice and in paying good fees for excellent work. So these are trends that we see, and I believe in the course of this program, we'll be able to shed more light in these areas. Thank you.
All right. Thank you so much, Odoi. And just talking on those trends is perfect segue into our next round of questions. And I have a few trends in mind that I want to quiz you four on. And Funke, I'm just going to start with you again. And the buzzword PropTech, and there is even a PropTech panel, but I just want to hear your own thoughts from an institutional perspective. How do you think PropTech And a second trend, changing demography of decision makers, whether I like it or not. Average age of managers, CEOs, and what have you is reducing, right? And comes with a new taste board. Okay, so how do you think that's going to affect real estate, PropTech, and change in demography?
Sure. To be candid, in terms of our business, this is not one where we have significant interface with, but obviously, as a participant, and I have my own views in terms of how PropTech is changing. And it's not just PropTech, it's looking at technology in itself and how it's disrupting different sectors. So if you look at the agency business in terms now, if you're not online, you're probably not being able to distribute effectively. So you're seeing that these things are being adopted, and then it comes back to the age of the population. So just as an anecdote, with the COVID tests that you have to do to travel, my mother is 84 now, and she had to go back to the UK. And then the last time we do a COVID test, they post something to you, you go, you check online. It's almost as if you can't complete your life. You can't effectively deal. And then I was here thinking, how is she going to do this? Go online, check this. And that's really talking about the age. When you look at I think the population for Nigeria, I think it is 70% that is below 15. And so, even in this room, we're not representative, irrespective of, some of us may be on the upper end of the age limit here. So eventually, you have to, in anything that you're doing, actually have to think about how technology is going to impact you. I think we all talk about COVID and the adoption of virtual use in terms of, how we're going to leverage, how you're going to be able to distribute, how you're going to be able to conduct tours. An interesting one is also e-signing. You can actually complete transactions without actually signing any physical document, and all of this is going to now be legal and also obviously effectively here. One interesting one that I have seen also is crowdfunding, and saying, they're almost democratizing also not just the capital markets in the form in terms of how to actually, bring investments and be able to aggregate investment. And people are beginning to say, I heard a pitch recently talking about how crowdfunding will help deal with the issue that's been talked about finance. But, and I'm going to go back and say, I've been in private equity in the last 11 years now, exclusively on real estate. And, my job has always been about investing. And really, ironically, that's always the biggest challenge, finding the right outlets to invest. And most people, most people will tell you that it is actually, the biggest challenge is access to finance. I think from the points that were said by both Mr. Kunle and Ms. Hughes, the key issue is those fundamental things. So if I want to give my own 2 cents for residential, in my view, it's the holy grail. Whoever solves it is going to be the most successful investor. So you're dealing with so many things that you have to deal with structurally, and putting all the money to build all the estates. There are people who've built, they haven't found buyers. So there are so many other things that you have to do. So I think between age and technology, you're going to see a lot of things being done differently. In developed markets, maybe 20, 30 years ago, people moved out of the suburb for a lifestyle. What you're finding out, like, people want to stay in the city center. So if we look about Lagos, when I was in my early 20s, I lived in, going over the bridge was not even an issue. You did it 2 hours one way sometimes, whether you like, there are many 25-year-olds today in Nigeria who will tell you they would never do that. So having a solution in Lekki Phase 1 or somewhere on the island is an absolute must for their lifestyles that they have to live. So there are many things that, you have to think about the youth, how they use information, how do you get access to them, and how do you provide solutions that meet their lifestyle and their aspirations.
what's up? I'm going to go on a personal crusade to bring you up to speed on some prop tech solutions that, are already revolutionizing things, even in Nigeria. But we're running out of time, so go and run quickly to Mr. Kitsunde, prop tech. But I also want you to touch on a new and growing trend, which is entrance of foreign players, into the West African market, and how that would change things as well. So prop tech and foreign entrance.
Thank you very much, Tayo. I'll make it very, very snappy. But permit me to deal with, because if I leave this room, people will think this guy is a complainant. So let me drop one or two solutions that I think we should look at in terms of really supporting the local real estate investors, because it's only us that can solve this problem. No foreign company will come and solve this problem for us. They won't go into that space. They will stay in the traditional, international way of doing things, which doesn't work for us. Number one, I think we have tremendous opportunity in the pension fund. Today, the fund is 12 trillion naira. Unfortunately, 68% of that fund is investment in government bond. Right? Infrastructure, as at Q3 last year, has only gotten 54 billion. That is 0.45% of their fund. Real estate got 217 billion. That's 1.8%. Who is contributing to pension? Who needs homes? Why are you taking the money from me and giving it to government? So, number one, I think we all have to raise our voice loud to government that home ownership is priority. If the pension belongs to me, don't wait until when I retire before I have access to it to build. What would government do to put in place a deliberate policy that mandates all the pension fund to put certain percentage into real estate development? That will help. Number two, Funke has already spoken about the crowdfunding. We have to find a way out. It's like a footballer, an attacker. If you meet a strong defender, you take another route. You just have to get the goal. So we have to keep exploring for other opportunities to get our projects funded. And I'm saying funding, like I said before, fund will only go to where it's welcome. As project developers, please, let's do the heavy lifting. The problem I see is that the financial management intelligence in our industry is not as strong as it should be. You must have bankable projects. Project management skills need to go up. We must be able to present our project in a manner that gives comfort to the people that fund it. Even if you have a project that is beautiful and you cannot present it, you can't package it well, you will not get funding. You will scare the investors. So I think we need to help ourselves before our industry continues to get this bad image that we cannot do project development well and deliver houses. So that's what I want to say there. On trending, number one, PropTech. What is technology? What does it do? It's an enabler. It's an accelerator. We must see the opportunity of bringing technology into real estate to open the gateway, to make our transactions more transparent, both at government level and at project delivery level, such that if a banker or somebody wants to provide fund, they must see the transparency in what you are doing. They must see the capacity to deliver. It must be clear. Then they will be comfortable to put fund, because the ROI meaning on the two dimensions will work: return on investment and the return of investment. So it's important for us to ensure that technology is deployed and we make it work to support government. You go to Rwanda, land today, both registration, titling and everything is digitalized. Here in Nigeria, we've seen where we rank with respect to land ownership and stuff like that, and title and registration. It's still tough. Let's make these things simpler for ourselves, and we'll see real estate thriving.
Okay.
Thank you very much.
Thank you so much, sir. All right. Ms. Hughes, I just want you to talk on real estate as a service. All right. Younger demographics are now, they are not essentially keen on, holding every subsector of real estate class. They just want to have it as a service. What are your thoughts about that?
Okay, so real estate as a service. I mean, that's quite a broad. Subject for me to talk about. But maybe I'll start from where we just left off about PropTech. I mean, PropTech is. There's a panel that's going to talk about that, so I guess they're the experts on that. But it's an emerging, innovative way, an innovative approach to real estate, and it also speaks to. So again, we're just trying to join the dots with trends, right? So I think more and more in real estate we speak about lifestyle. So lifestyle at whatever segment of society, everybody is talking about appropriate lifestyle. Everybody is talking about aspirational lifestyle. And real estate is and real estate is something that people can key into, and they can. It's something that can support whatever lifestyle it is that they aspire to. In terms of, so Dunsi, I can't leave this panel without just touching again on sustainable building trends.
Please.
So it may be a divergence from the question you've asked me about. But in terms of really trends for the future, I think that the concept of green is taking shape. The concept of sustainability, energy reduction, materials, building designs. We're going back, I would say, to the basic concepts of, I don't want to say tropical design, but for real estate, residential real estate, we're talking about, ways in which, the design of buildings can depend less on, on energy that is not clean. And green, I think green is the way forward.
Brilliant.
Thank you.
Thank you so much, Ms. Hughes. Last question of the day, and I think I want you to focus on what should we be looking out for. What are the new frontiers in the next 12 to 24 months? What's that crystal ball saying? I think you're actually a perfect person to answer this question, since you can play with football with both legs.
Thank you very much. I'll make it very snappy. I know our time is fast spent. So I don't have a crystal ball, unlike, contrary to what some may believe. But I believe very strongly that the outlook is very bright for real estate in West Africa. And that is because we've seen it done over and over and over again. I give a few examples in my opening comments. And I believe what's going to drive this will continue to be the fundamentals. We have a growing population, and we have a very resilient informal sector. So a lot of the statistics that we have out there just focuses on the formal sector. But there's a huge informal sector that is driving a lot of demand that a lot of us do not capture. So you will neglect the informal sector at your own peril. And that is where things like PropTech and a lot of these technologies, have the opportunity to capture the wider market that are not necessarily the main focus of institutional, researchers and institutional investors. There was a story about how MTN came into the country and everybody thought they were never going to have even 1 million subscribers. And now we have several subscribers in that segment. So my prediction would be still put your money in real estate, still continue to drive your products and agenda, but do it in a very creative way that effectively puts technology at the center. Technology is known to be disruptive, and we would all, I think, do well to ensure that we incorporate a little bit of that in everything that we do. Thank you very much.
Brilliant, brilliant. There we have it. The outlook for the sector is bright and is based on the fundamentals, and you don't neglect the informal sector and put technology at the center. Thank you so much to this fantastic panel. It's been great moderating. Thank you.
Thank you, ladies and gentlemen, for